In this video, we are going to talk about how many shares of stock to make $1,000 per month in dividends. So before starting this video, please like this video and subscribe to this channel for our future updates. Extra money coming in each month to help you save for the future or pay your bills is an amazing thing, especially when you barely have time in the margins to think. Earning money while you sleep allows you to increase your income with limited extra effort. Passive income is limited in effort to a degree. You need to put in some initial work to get things going, but not to the level of your day job. An extra income stream can either help you achieve your financial goals quicker or set larger goals. $1,000 a month in dividends is an awesome goal, and if you're starting from scratch it may take you some time to get there. So in the short term, if you don't need the money to pay bills, you can let the earnings compound towards $1,000 in monthly dividends while you also continue to buy additional shares. Let's look at how you could choose the right stocks to pay you $1,000 in monthly income or any amount you need. But before we begin, why don't you hit the subscribe button and the bell notification icon so that you never miss any of our videos. Let's begin. How much money do you need to create a portfolio that pays $1,000 a month in dividends? The actual amount of money you'll need to invest to create a $1,000 per month dividend portfolio depends on the dividend yield of the stocks you buy. What is dividend yield? It's the return on investment in terms of the dividends you receive for the money you invested. The dividend yield calculated by dividing the annual dividend paid per share by the current share price. For money you invest, you receive Y% in dividends back. Before you start thinking of trying to find higher yields, make this process faster. The usual recommendation for regular stocks are yields in the range of 2.5% to 3.5%. Of course, this benchmark was prior to the 2020 global situation, so the range may flex while the markets continue to swing. And it also assumes you're ready to start investing in the market while it's moving a lot. For this example, let's keep the conversation simple by targeting a 3% dividend yield and focusing on quarterly stock payments. Most stocks that pay dividends do that 4 times a year. To cover all 12 months of the year, you'll need a minimum of 3 different stocks. If each payment is $1,000, you'll need to invest in enough shares to earn $4,000 per year from each company. To estimate how you'll need to invest per stock, divide $4,000 by 3%, which results in a holding value of $133,333. And then multiply that by 3 for a total portfolio value of around $400,000. Not a small amount of money, especially if you're starting from scratch. Before you start looking for higher dividend yield stocks as a shortcut, you may be thinking that you can shortcut the process and reduce your investment by looking for higher dividend yield stocks. In theory that could be true, but stocks with dividend yields above 3.5% are generally considered risky. Under normal marketing conditions, higher dividend yields generally reflect there may be a problem with the company. Driving down the share price raises the dividend yield. Take a look at the stock commentary on a site such as Seeking Alpha to see if the dividend at risk for a cut. While everyone has their own opinion, make sure you're an informed investor before deciding you're willing to take the risk. If the dividend is cut, the stock price generally goes down further. So then you're out both dividend income and portfolio value. That's not to say that happens 100% of the time, so it's your call on the risks you're willing to take. How to choose your stocks to align your dividend earnings to each calendar month. Quarterly dividend payments are the structure you'll find with most dividend stocks. Some will pay monthly, once a year, twice a year, or even less scheduled. Focusing on the quarterly payments for this example, you need to buy at least 3 different stocks that follow specific payment patterns. Before this starts to sound impossible, there are 3 common dividend payment patterns that many stocks follow. Not all stocks follow these patterns exactly, but it will give you a place to start. The 3 dividend payment patterns align to the month in the quarter. First month, January, April, July, October. Second month, February, May, August, November. Third month, March, June, September, December. If you buy 1 stock for each pattern, your investment portfolio will likely pay you dividends each month of the year. Of course, this is where the footnote needs to be starred to remind you that nothing is 100% guaranteed. Sometimes payments will shift between months, especially if the company usually pays out at the very beginning or end of the month. Or for some reason, the company decides to change its payment schedule. That does happen from time to time. And make sure to do your research before investing in a company. Just because the stock fits or doesn't fit the payment pattern exactly, it doesn't mean it's a stock to buy or skip. 3 do's and don'ts for choosing stocks for your dividend income portfolio. When you're ready to start building your dividend income portfolio, here are 7 things I learned from my own journey. Start smaller when starting from scratch. In order to earn $1,000 per month in dividends, you'll need a portfolio of approximately $400,000. Today that may sound like an impossibly huge number, especially if you're not converting an existing IRA. Instead, start building at smaller incremental dividend goals such as $100 a month. Continue to invest and reinvest over time to reach your larger goal. Now that the large brokerage companies cut trading commissions to $0, it's easier and efficient to make smaller share purchases more often. Invest in different stocks. Aside from the simple reality that in order to cover all months of the year with regular stocks you'll need to invest in different companies, $400,000 is a large amount of money. Diversifying the companies you purchase stock in spreads the risk. 3 stocks are putting a lot of eggs in a few baskets. If one of those stocks goes bad, a huge percentage of your portfolio would be impacted. And investing in different stocks allows you to cover different industries and buy something at a better value at the time. Maybe divide it up so that no stock accounts for more than $200 or $250 of a single month's dividend income. Double check the stock's next ex-dividend date before you purchase your shares. Check to see if you'll qualify to receive the next dividend payment. The ex-dividend date means the stock is trading excluding dividend. You need to own the shares before that date to be eligible to receive the future dividend payment. Do a quick check for the next ex-dividend and payment dates. Even if you don't qualify for the next dividend payment, you may still want to purchase the shares anyway. But depending on what's on your watch list, a different stock may be a better purchase for the moment. Making $1,000 a month in dividends. Earning $1,000 a month in dividends as passive income is a great way to supplement your income, or grow your portfolio on autopilot until you need to spend the money. Intentional stock selection can allow you to receive a dividend payment each month. Make sure to do your research first to ensure it's a good fit for your portfolio and not just the calendar. Remember to spread the risk with stocks in different industries. Splitting up your $1,000 monthly goal across multiple stocks ensures you don't have all of your eggs in 1 or 2 baskets. Start where you can and grow your portfolio over time. Don't get discouraged if you're not able to create a $1,000 in monthly dividend income from day one. What do you think of our video? What are your additional tips or strategies to make $1,000 per month in dividends? Let us know in the comment section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button and turn on notifications before you go. Thanks for watching.